Hey, good morning, everybody. Thank you for being here. We're going to give it another minute or so to let some stragglers come in and we'll get started. All right, everybody, thank you for being here. My name is Brian Thompson with Descartes Underwriting. I am our Senior Vice President of Business Development for North America. Really excited to have you here today. We've got a pretty good informational webinar on flood risk, kind of the current market trends, some solutions we have for it, and hopefully we have some good information for you guys and some good takeaways. There will be a Q&A. Feel free to add in the chat. If we don't address it during the conversation, we'll have time at the end for that. So let me get started here. Again, excited to have everybody with us. There we go. So quick agenda. We've got the team introductions, then we're going to walk through growing challenges, market gaps and limitations, innovative solutions, kind of how we're addressing those problems, launch of our flood product, as well as some of the industries that we're seeing access and benefits in, and then leave time for the Q&A at the end. So without further ado, team introduction. So as I said, Brian Thompson with Descartes. We've also got Hamid Kandahari, who is our data scientist and senior underwriter, Robert Rittenhouse, who is an assistant vice president here in North America, and Austin Roberts, who is again also assistant vice president here in North America. And Hamid?
Yep. Hi, everybody. Thanks for the introduction, Brian. So we'll begin with just the growing challenges of flood risk in the US. And can I just move the slide forward? There we go. Yes. So yeah, we'll begin briefly with an overview of the risk profile in the US and how it's changing. The way we'll do that to begin with is look at the major losses over the recent years. So on the graph on the right, we have the number of billion-dollar flood disasters, and this isn't including the ones induced by cyclone per year over the entire of the US. It's clear from looking at it, there's a marked increase in the number of major loss-causing events. In the last 10 years, between 2015 and 2024, there have been $19 billion losses. In the 10 years prior to that, there were only 10. And if you compare it to the 90s, and it's really striking how that risk profile has evolved over the last 40 years. The flooding itself comes in various different forms and by different mechanisms. We consider some recent events, so we've listed 5 there, and we can just sort of run through them and talk about how they came about. And my colleague Austin later will run through the various solutions we have for different kinds of flooding. But we'll begin with this list and how, to demonstrate how they varied in nature. In 2019, 6 years ago, there was major flooding over the Mississippi River Basin. It was exacerbated by snowfall, combined with high temperatures and heavy rainfall. It led to very high river flows, flooding very large areas all down the Mississippi River Basin. Fresh in the memory by a different mechanism was very heavy rainfall through atmospheric rivers in California. So back end of 2022 into 2023, several atmospheric rivers causing large losses and major floods. And closer again, so in Fort Lauderdale earlier 2023, we had flash flooding. So flash flooding is the situation where you have major rainfall over a couple of hours, causing lots of damage. And incidentally, this year there have been more major flash flood alerts than any year since 1986. And again, like this will be fresh in memory too, but Hurricane Helen, completely different cyclone-driven rainfall. It's not included in the list that we have on the graph, but it's more familiar form of flooding. And if we look sort of spatially, so the risk is no longer confined to just coastal regions. I think when we think of flooding in the US, typically, they're driven by cyclone or storm surge, but it's no longer correct to just consider those areas as risky. Inland flooding is becoming much more of a relevant problem and a major threat. And the map we have here is derived from 13,000 weather stations, which demonstrate how the trends over time have changed. And we see sort of pockets where the risk is really evolving. An interesting demonstration, an example of this is what happened in 2022, where within a 2-week period, we had 5 events which were previously considered to be 1 in 1,000 year floods. So an annual probability of 0.1%. We had 5 of those in a 2-week period all across the US. So this was over Missouri, Kentucky, Illinois, California, and Texas. And just to finish off on this introduction, the risk is evolving, it's changing for everybody, and more than 1/3 of the US population will experience what is considered to be now a 1% chance flood, a 1 in 100 year event, at least 3 times in their lifetime. And we have a lot of content on our website and demonstrating sort of our view and the mechanisms behind the risk increase in flood, and we'd welcome you to go check this out. But now I'll pass over to my colleagues. Thank you very much.
Yeah, thanks, Hamid. So I'm going to be talking a little bit about some of the market gaps and limitations within the traditional property, or I guess traditional flood market, specifically NFIP. So kind of to kick things off, non-damage business interruption is a core component of Parametric and is a really good way to kind of carve out some of that uncertainty or policy gaps that you might find within other traditional, options that you have out there. So good example that I always like to use is, let's say you have a mountaintop resort or really any sort of asset class that might not be super exposed to flooding itself, but maybe they have a bridge or 2 bridges that are the only access points for that property. Under traditional policy, it'd be very difficult to ensure those in the same way that a parametric policy would. We could take a look at the river flooding levels within that and build a structure that addresses that specific business interruption concern. Whereas under traditional business interruption policy, you'd need to have that physical property damage component to the actual building itself. So that just highlights one of kind of the key gaps that you'll find within not just NFIP, but your other traditional flood options. Furthermore, I think it's no secret to everyone here that, commercial property claims or just claims in general can drag out for years and years and years. Helene happened, just last year, and, we're seeing less than half of those claims closed as of June 10th of this year. And those are just closed with or without payment. So, we're looking at quite a bit of uncertainty as it pertains to, is my claim going to be adjusted properly? Is it actually getting adjusted? Do we have the coverage that we thought we had? So, Parametric, the transparency and simplicity of understanding our policy forms lends a lot of credibility to some of those cases. And furthermore, our turnaround time for claims is only about 2 to 4 weeks. So that immediate liquidity and having, cash in the bank account to be able to get contractors and to be able to get back up on your feet is tremendously important, especially following any sort of natural catastrophe event. Going into FEMA and NFIP a little bit as well, with all the government shutdowns, budget cuts, especially to some of these types of projects, relying on FEMA is starting to become less and less of kind of a certainty. So not only are we a good carve out for specific coverage gaps, but I would say we're a really good uncertainty gap. You don't really want to be caught in a situation where you're relying solely on the government to react as it had 5-10 years ago. And I think we've seen unfortunately numerous examples where FEMA and NFIP, now with the government shutdown, just aren't functioning at full capacity, and kind of leaving a lot of folks wondering whether or not they're going to be able to pick up the pieces after an event. Specifically to NFIP, since this is 95% of the flood market within the U.S., with the government shutdown, they're unable to accept new and renewal policies through, I believe it's either the end of November, beginning of December. So, just a lot of uncertainty going into that marketplace and the long-term feasibility there. But, Furthermore, within the policies themselves, there's quite a few gaps that Parametric just, doesn't have specifically. So, outdoor buildings aren't covered. So things like barns or any other structures outside of the primary property are not going to be covered. Basements and temporary living expenses are not covered as well. So, for basements, it's pretty easy to move light equipment up and get things above that ground level, which is what NFI defines as, basement or below. But if you have HVAC or other kind of infrastructure within that building, those are immovable. So, you're looking at zero coverage for those contents. Furthermore, the max limits for commercial buildings and contents are 500K each. And that even goes down for personal at 250K and 100K respectively as well. So even though you might have an NFIP policy in place, it's really not providing all that much coverage. 500K in a natural catastrophe event adds up very, very quickly. So in a lot of instances, we'll see, a client purchase an NFIP policy, and then we'll come in and fill in some of those gaps in addition to NFIP. So, we don't want to get the idea that it's one or the other. We complement each other well, and we do act well as a standalone too. Furthermore, 30-day waiting period for coverage to kick in, and there's no coverage for earth movement because of flooding. So think about mudslides, landslides, things that, might take out a bridge, like in our previous example. So, these are things that aren't covered traditionally under, any sort of NFIP or traditional policy. But so long as the event meets the triggers that we set forth in the policy, it would pay for, any economic loss tied to that event. And then looking further into market conditions and some key examples, market conditions is a little bit higher level view than what I may have touched on earlier, but 2024 was the third costliest year since been measured for the flood market specifically. A lot of that driven by Helene and Milton, obviously, but it kind of goes to show just how prevalent these events are. And then taking a look at Harvey as well, which was a massive insured loss. These events, and to Mead's point earlier, we're seeing these, 1,000-year, 500-year floods become more and more frequent. And we also saw what happened in Central Texas earlier this year as well. So areas that you might not expect flooding to occur, it's happening. So kind of getting to my last bullet point under market conditions, we're seeing different types of, flooding events impacting. If you look over at the graphic on the left, this was the Midwest flood of 2019, which was a result of excess snow melt. So, not only do we need to be thinking about flooding in coastal areas with hurricane and storm surge, but, excess rainfall in areas like Texas or Western North Carolina, as we see in the graphic below with Helene, in addition to severe convective storm, which we're all familiar with as well. Furthermore, we're seeing property market generally softening across the board. Flood markets remaining, I shouldn't say it's remaining hard specifically, but there's certainly pockets where, it's hardening or remaining just as hard as it was. Either case, we're seeing pricing decrease across the board in property, but terms and conditions and exclusions are remaining steady. And, when you look at a parametric policy, we typically don't look to completely replace a program. We do really well at solving specific problems within your portfolio. So with these coverage gaps and exclusions still existing, especially within the flood property market, we find ourselves a very good complement in that space. And just to kind of highlight some of the economic and insured losses in recent years, we'll keep on with the examples of Helene and Milton. The total economic loss for Helene, 30 to 45 billion. Like I mentioned, a lot of this still developing. We have a lot of long tail claims that are going to come out of this. But, the insured flood loss was only about 17% of that total economic loss. And the uninsured loss was closer to 60%. So it really just goes to show that, these events can happen anywhere. They're becoming more frequent, and not holding any sort of flood coverage is leaving yourself highly exposed, especially if you're a large firm. A lot of, these firms don't have that budgeted in. So having some level of flood insurance or, parametric or otherwise is incredibly important. And, like I said, volatility hedge, uncertainty hedge, whatever it happens to be, we're able to kind of create structures around that. Same with Harvey, roughly 70% of the flood damage went uninsured. Incredibly high numbers there as well. as I mentioned, loss is still developing. We'll see how all of it lands, but you know, property market for flooding seems to seems to not be getting a whole lot better. And we do have solutions where the traditional market just is not adequately set up to be able to do so.
All right. Thank you, Robert. Thank you, Mead. So now let's talk about some of the solutions that we do have. So flood is unique where there's a few different ways that we can address it. As we all know, there's different types of flooding. You have storm surge, you have fluvial, you have pluvial. In each client and each risk that comes in, we treat independently. There's not really an off-the-shelf product. We really try to customize these to the client's needs and the problems that you're facing. So I'll talk about the different options that we have here and then spend a little more time on our sensor product. This is our new flagship product, just released a few months ago. Can you go back real quick? Thank you, sir. So first I want to talk about here, storm surge. This is currently specifically for Western Florida and the Mississippi coast. Early next year, it will be available on the East Coast. But this is really for coastal only properties. Where storm surge is their main concern. So we use it's actually a modeled output. So there are no sensors, so no concern of storm surge taking out a sensor. This is the same model that FEMA and first responders use whenever they are sending resources in after a landfall. It takes in a number of different characteristics with rainfall, runoff, wind speed, speed of the actual hurricane, elevation. It's extremely accurate. NOAA contributes to it, a bunch of different universities. So really great product for condo associations, hospitality clients that are right along the coast. And we've had a lot of success with this, like I said, specifically Western Florida for clients that have been impacted by Ian, Milton, Helene. So that storm surge. The next one I'll talk about is river level flooding. As we all know, the USGS has a vast network of sensors. There's hundreds of them, and they sometimes will be right next to your property and you don't even know about it. So that's one of the first things we'll take a look at is there a public gauge nearby? And if so, it is very easy for us to tap into that, use that data, and build a solution for you. However, limitations, some clients are not always going to have a gauge in their backyard. There might be a gauge 2 to 3 miles upstream. And while the back testing might look good, it's ultimately tough for a client to wrap their head around the gauge being a 20-minute drive away. And so that is one of the major reasons we developed our sensor-based product. Real quickly, I'll talk on excess rainfall. You can use this for flash flooding scenarios where it's based on how much rainfall is falling in a certain time period. But a lot of people will use this more for the cancellation space. So whether it's sports and entertainment or just hospitality and tourism, where we're almost trying to act as a hedge for some of your operations where they can be negatively affected by excess precipitation. So that's another way we can do it. But then that leads us to sensor-based with these other three options kind of a little bit limited in where they can play. The sensor-based product truly is available to everybody in the lower 48 and can be customized directly to your needs. So if we go to the next slide here. So just high level, as I said, it is a sensor-based product, and I'll talk about the specifications of it on the next slide. But few high-level items, we can provide up to 70 million per contract per location. We can do single or multi-locations, single or multi-sensors. Extremely customizable on that front. Time frame as well is also customizable. Typically, we're doing 12 months, but we can do short-term. We can do long-term agreements, really whatever works. As far as the required data, really, we just need a traditional property submission to get the ball rolling. However, the more data that you have on this, the more we can refine our structure to eliminate basis risk, or not completely eliminate it, but reduce the basis risk. So if you have flood loss reports, watermarks, hydrological studies, NFIP elevation certificates, all of that is extremely helpful. We take all that into consideration as well as our own proprietary modeling, and then we will build a solution around that. You can see an example payout structure on the bottom. This is similar to the majority of our flood products and most parametric products in general, where it is a scaling payout. Everything's predefined, and it will just scale up. The more water, the more the payout. One thing to note with our product specifically is we do not have a minimum attachment. There are other products out there where the minimum needs to be a foot, sometimes 8 inches. We can go as low as needed. Obviously, this is a catastrophic design product, so going extremely low for an attachment might not be cost effective. However, we can do it. And on the next slide, I want to talk about the accuracy. You'll see it's 2 millimeters. So extremely accurate. When it comes to the sensor specifics itself, everything is fully contained, so it's a very impressive unit. The battery can last internally 5 to 7 years. There's no wires, no external communications or anything. Very sleek products. We have two. Oh, I'm so sorry. All right, sorry about that, guys. Dog got crazy. Door wasn't locked. When it comes to the sensors itself, IP86, IP67, wind resistant, water resistant. These have been tested in hurricanes. They are very bulletproof. We tell people that they are as hardened as the structure that is attached to. And we will take that in consideration on where we put the sensor itself, and I'll talk about that a little bit on the next thing. When it comes to installation guidance, some clients, they know exactly where they want to put this sensor, and that is fine. They say, hey, if water starts building up here, this is when we're going to have problems. We can go based off that, or we can actually send a survey out to kind of collaborate with you and get different elevation reports on different side of the properties to make this as accurate as possible. Constant remote maintenance, we can tell if there's any issues with the sensor. And we'll come out there and fix it and make sure everything's good. As I said, highly accurate, 2 millimeter. So yeah, that's kind of the specifics here. And then this is a very cool additional feature is the dashboard component. So the client will have access to this, and everything is live. You are seeing the exact same thing that we are seeing. It's an added layer of transparency. And it is also a risk management tool at the end of the day. You can set alerts to your phone, to your email that say, hey, once water gets to this threshold, let me know. So if you're not at the property, if no one's at the property, you can still be in the know and making call to supply chain or whatever you need to do. It also just tells you the status. Sometimes you look up, you see a sensor, you're like, is it really doing what it's supposed to do? Yes, you can see everything that's going on. So just another cool feature. And then who benefits? So everybody does at the end of the day. And Hamid talked about it. This is no longer just when it comes to geography, this is no longer just coastal. This is no longer right next to a river. Everybody is experiencing flooding. Even if you're not in a flood zone, you are still at risk, and all industries will be affected. It does not discriminate. However, there are certain industries that it's a really good fit with. And that also goes for just parametrics in general. So real estate, hospitality being the number one. As Robert mentioned, the non-damage BI component of it is extremely impactful. Excess floods typically needed on these. You have large TIVs. And for the hospitality aspect of it, as I said, the NDBI, the BI component is very useful. Public entities is one that I think is going to be increasingly important here in the next few years surrounding the uncertainty with FEMA. There is a lot of chatter that some of this might be pushed back to the state and local governments. And if that's the case, there will need to be some type of risk transfer. And the beauty of parametrics is the flexibility of our cover. You can use it for humanitarian efforts within your community. You can use it for infrastructure. You can use it for actual property. It's really all economic losses is what we can address, which is a huge bonus for public entities. And then just the lack of adjusting. There is no adjusting. It's very transparent. So manufacturing is another good one. The BI exposures, the faster you get up and running, the better. And with us paying out 1 to 2 weeks, it's a perfect fit. Data centers is another one, a little more niche, but the capacity requirements for these are massive. $1 billion TIVs there, additional capacity, alternative capacity is typically needed. And then also the common theme here, BI exposure. So that's another great benefit there. But As I mentioned, everybody can use this. We look at all different industry types all around the country, and we'll find a solution to build it for you. So.
Great. Thanks, everybody. So on that note, we are at the Q&A section. We do have one question from John West. If you have questions, please feel free to type them in. We'll love to answer them for you. So John asked, would we be able to show how flood maps used to look versus the current map? And what does the forecast look like over the next 20 years? Unfortunately, John, we don't have that available for you. Additionally, we do look at risk quite a bit different than the traditional flood market. Hamid, I don't know if you want to answer maybe how we look at that and where those come into play with us.
Yeah, so I think, we won't be able to share sort of the way that we do it, but there are definitely resources we can point you to. So there was a publication by Nature, so a very esteemed scientific journal a couple of years ago, showing exactly what you described. And we can reach out and send that link to you.
Great, thank you. And if you guys have any other questions, please feel free to ask them. We'll be here for you. So. And if you don't, and something comes up later, please feel free to reach out to any of us here on this call. We're more than happy to answer it. We will share this recording as well, so please feel free to broadcast it out to your broader teams, anyone that may be interested. But again, if you have additional questions, want more information on the products, please reach out to any of us. It's firstname.lastname@descartesunderwriting.com. More than happy to work with you and answer those questions. So I will hang around for a few more minutes in case any come in, but otherwise, thank you all so much for joining. We really appreciate it. Thank you for your time today. Looking forward to working with you. Okay, looks like we actually had some questions come in. So Alexandra, you asked, do we have any backups in place in the event a sensor is destroyed? Austin.
Yes, we actually have a number of ways to do this. If it's a coastal property, we can actually use the surge model that we have as a backup. If it's a river, we can use backup river gauges as well. We also have the option to place multiple sensors if the client wishes. And then we can also do cameras too, so you can kind of see a live feed of the gauge itself as another backup. So number of different ways, some public, some additional installations, but yeah, numerous ways to have backups.
Yep, absolutely. Thank you. And then Marshall Crane, you asked if maximum/minimum policy term and links, we can go as short as about a month on this. On most of our policies, we can go shorter. This one, because we are installing an actual sensor on site, we would like a longer term policy, but we can also go up to 3 years. So really depending on what you're trying to solve for, we may not use the sensor product. We may use a different approach for shorter term policies, but overall we're pretty flexible on how that works. So thank you for the questions. Great. Well, thanks everybody for joining. We really appreciate it, and we'll get this recording shared out shortly. Have a great week.